How you doing, James? I see you on there. How you doing, James? I see you on there. How you doing, guys? How you doing? How you doing? Guys, do me a favor. Share the link on our groups so we can get the rest of everyone on here as well. Probably just a link somewhere. Just click on the video link or something. I'm not sure. Yeah, it would have come up as a little notification. Yes, Ben. Bloodbath. Bloodbath indeed. Don't worry, I'm going to explain exactly what's happened and what to expect. Can everyone see my screen all right? Brilliant, brilliant, brilliant. Ben, do me a favor, try and find a link to this and then send it across to the group. Yeah. Yes, please, on our trading analysis group, please. More the merrier. More knowledge to share. Total bloodbath. This is crazy. All right, guys, wait for a few more minutes and then I'm going to crack on. Look at some of these numbers. At one point, some of these were like minus 50%. 55, some of them were on. Everything's kind of recovered a little bit, but still a lot of blood on these streets. Let's have a look at the actual the market cap. So the market cap of the whole of the cryptocurrency space at one point was at 2.5 trillion. Yeah, 2.5 trillion at the top here. We dropped all the way to 1.2. So you're telling me in the space of what we're saying this week we have dropped more than 1 trillion in market cap for the whole of crypto. That's just insane. Insane. Look at this, guys. Look at this. We're going to go from the top 2.5K all the way to 1.2. That's phenomenal. What a drop. What a drop. But it's inevitable. It was always going to happen. Look at where we are. Look at the chart structure of what we see here. We see the bottoms in down here. We're up for the 1. We're down for the 2. We're in the 3. We're coming down for the 4. It's what should happen. You know, did people honestly think that this was just going to go up to infinity and beyond without coming back at any point? You know, it was inevitable. I'm going to get into the details of this in a moment, but that's phenomenal. Let's look at everything excluding Bitcoin. And so let me remove this. And if we look at this is clockwork, guys. Look at the rate I had on previously from one of the previous highs down there, and this is very, very similar. If you were to take into consideration, this was again just shy of 1.5 trillion. Remember, guys, this is market cap, yeah, excluding Bitcoin. So this is basically all the altcoins together. And then if we were to go to the lowest point there, well, oh my god, it dropped to 656 billion. Yeah. Now remember, guys, we're talking big money here. Yeah, from 657 billion all the way to 1.5 trillion. You know, wiped out. That's phenomenal. Phenomenal. So, Ben, what you're saying? What price is it to the tip of wave 1 of Bitcoin? Let's go back to the BTC chart. Tip of wave 1. Just 20,000, right? 20,000, because of course that was the top of the initial bull run that we had. 20,000 was the top, so that would obviously be the major level there. So could it go down to it? Well, we know, you know, that a wave 4 likes to obviously retrace, especially if it's impulsive like it was, up to 38.2 to 50%, which is obviously the wave 4 characteristics. But we know it likes to obviously go to the tip of wave 1. So are we saying this thing could go all the way down to 20,000? You show me where there's a reversal sign. There's no reversal sign that is telling you that all of a sudden this is going to go in the opposite direction. Only thing that's looking more promising in our favor is obviously the wick that we see here. Now we know obviously less than 6. We know what type of wick that is, and so wait and see how that forms. Now we know this candlestick. Look at this, phenomenal hammer candle right here, and you can see this corrective move down 3. It's strong, very, very strong. 3 waves down for an A, 3 waves up for a B, and this looks like a 1, 2, 3, which gives it a WXY. So this is not even an ABC. This is a WXY corrective. But what it looks like when you put everything together, phenomenal, man. And you look at the chart pattern. We know that's an ascending wedge straight into our target zone. Straight gone from there. So phenomenal work. And look at the top, the top that I called 65. We were literally a couple of dollars shy from that. That was a phenomenal call. And calling the top and then closing 80% of our portfolio was a phenomenal call. There are times where we call price to reach and to reverse from and to do what it does. But that was some call. To call this correction was some call. And I've had numerous conversations with many of you guys. I remember on CNA and Lesson we spoke about it. Throughout this whole bull run, every time we hit a psychological number, every 5,000, 10,000, I was telling you guys to withdraw your profits. I was telling you for a reason. I know I've been around way too long to know what is going to happen. Did you think something that spun from 10,000 going all the way to 65,000 wasn't going to come crashing down? Yeah, it was inevitable. Now, yes, we managed to see things from a chart perspective, and that gave us the indication that things were going to fall. Yes, correct, great, fantastic. We called that. But what were the underlying reasons as to why Bitcoin fell the way it actually did? So, first and foremost, let's get the technicals out of the way. Yes, technically, it told us that it was gonna go down. Number two, there was a lot of FUD, fear, uncertainty, and doubt that surrounded Elon Musk, and Elon was one of the advocates for Bitcoin earlier on, and he obviously bought 1.5 billion worth of Bitcoin, put it straight onto his balance sheet of Tesla. And may I add, guys, he himself as an individual didn't buy it. He bought Bitcoin for his balance sheet for Tesla, the company. This is a company he owns, but he done it for Tesla, not for himself. You know, and this is we released an article on Dogecoin, and we had said that he was at the time talking about Dogecoin. Dogecoin put the picture of him holding that fox or whatever the animal is, and then everybody started to jump on the Dogecoin bandwagon. Let's go to Doge, by the way. Let's just have a look at Doge of how much this thing capitulated. 70%. Look at this. This thing dropped 70% this time, and it's just done 70% again. You know, tell me that patterns don't repeat. This is clockwork. So he was shilling, and that's the term that you say, shilling, where someone is promoting, yeah, without using the word promote, a specific coin, and that's what he was doing. He was shilling Dogecoin. Everybody got excited, was investing into Dogecoin, and Dogecoin was doing this massive rally. Yeah, it was doing this absolute rally. People were times 100, times 200, 300 of their investment, and they were making so much money. Fantastic, cool. But he himself didn't buy any Doge. He bought Bitcoin. So people don't read between the lines. They think, oh my God, fantastic, I'm going to get in Dogecoin because Elon Musk said it. Yes, he said it, but he didn't put his money where his mouth is. He didn't invest into it. But everybody else got so excited and they put it. Now, what I don't understand is how is everyone so comfortable with someone on the internet, doesn't matter if they're influential or not, telling them something and then people putting money behind it. So if I told you to go jump off a cliff, are you all going to go jump off a cliff? You wouldn't, would you? Or if a stranger came up to you on the street, tapped you on the shoulder and said, oh, do me a favor, can you give me some money? Are you going to give the money? You're not going to, are you? Yeah. So why do you give money to people that tweet things on social media? I don't understand. People are so easily accepting of what is said on social media that they're just giving money away. It makes absolutely zero sense. So I digress. So Elon didn't actually buy Doge. He bought Bitcoin, put it on his Tesla balance sheet. Job done. That was that. Everybody got excited. Everybody was raring. Yes, Elon Musk, you are an advocate for Bitcoin. You are the best. Rare. He's the new god. Everybody's falling at his feet. And that is what was happening. Now, Bitcoin rally got to 65,000. Now, he was one of the catalysts. I remember we called it Elon Week, I believe, where Bitcoin jumped 7,000 or 9,000, something along the lines of that in a week. So we called it the Elon candle. It was phenomenal, is what he done single-handedly. Push price up. Then price continued to do what it was doing. Institutions were getting involved because they had the confidence. They're saying, okay, if Elon and Tesla have got involved in this, maybe we should put Bitcoin on our balance sheet because obviously it's a safer investment at the time, especially when you've got a depleting US dollar versus a depleting gold. So it's the safer option to put it into Bitcoin. Then you've got Michael Saylor, who's again another advocate for Bitcoin, who held business conferences explaining and influencing other businesses to have Bitcoin on their balance sheets. And you have got hundreds of other companies and many institutions who then followed suit and then invested money into Bitcoin. Yeah. So Bitcoin did what it did. You got institutional investment, 65,000. Fantastic. Cool. Now, a rolling effect. A rolling effect is this. Let me take it back to the Bitcoin chart. Okay, let me go back to the daily, better view. Right, this is a rolling effect. All it was going to cause, Now, when Bitcoin psychologically got to 65,000, that's where I told a lot of my students it's probably time to reduce your exposure, and where I reduced my exposure by 80%, as a lot of students did. I was on a call to a couple of my guys, and then I remember saying that, you know, one of the questions that was said to me is that, Prish, what would happen? What would be the catalyst for Bitcoin to now fall, to then form that corrective move? Now, one of the reasons would be this. There are a lot of governments, yeah, in the world, there are a lot of institutions in the world, higher up institutions, there are a lot of authorities, yeah, who don't want you to make money, who don't want me to make money. Now remember, even though cryptocurrency is taxable, it's not heavily enforced in a lot of countries as yet. So, and the way it can only be enforced is that HRMC and FCA and regulators actually get data from exchanges which say that these people have taken profits, and that's how they can track it. Until that happens, no one's going to be able to track the profits that are made in cryptocurrency. But that is all on the agenda. But obviously, advice is obviously pay your taxes. It's just common sense. What you don't want to do is go to jail for the sake of a couple of $1,000s that you failed to disclose. Now, these higher up institutions and governments, they don't want none of us making money. So did you think they were going to allow everybody just to make money and to make a lot of it? No, there wasn't. Do you think they're stupid? Their goal, what's the purpose of tax? The purpose of tax is to take money from you. So you earn money, it takes a piece of the pie. And then they tell you that piece of the pie is for the greater good, it's for your country, it's to fix roads, it's to do all this other nonsense, right? Or to put money in their own pocket. Whatever the reason may be, but they're taking money from your pocket, right? So did you think that you could make some amounts of profits via crypto and the government and authorities not take a piece of the pie? No. Now, if there's no regulation in place to do so right now, or if there's no authority that's actually checking it, what's the next best thing? Easy. What you do, you call up, if you're a government, you call up an institution and you say, listen, I know you're heavily invested in Bitcoin. I know you have it. Now, if you don't want us to investigate you, we suggest you sell it. Then the snowball effect happens. They get scared. They're like, fine, because they're onto us. Nobody wants to get investigated. No institution or hedge fund wants to get investigated. Cool. So they sell their Bitcoin. They sell their Bitcoin. When they sell their Bitcoin, their friend down the road, remember, all hedge funds and institutions, a lot of them know each other. It's a quick phone call. Did you just sell your portfolio? Are you out of the game? Yeah, I'm out. I've just had a phone call from so-and-so. They're threatening to investigate, so I'm out. Cool, I'm out also. Then the next institution pulls out. Then the next one pulls out. Then the next one pulls out. So that's institutional money that has left the building, right? Hence, you get the dramatic drops. Now, I'm going to show you guys something. This was the area. When you saw this ray here, this ray was specifically there for a reason. And then, sorry, not that ray, this ray. This ray was there for a reason. Now you can see it was the tip of this move up here. Now this was specifically here. And what did I say? I said if this ray gets broken, then it can be a free-for-all. Why? This is all mainly institutions taking out their money. That's what the dramatic drop initially is. The rest of the drop, yeah, is not institution. The rest of the drop is the 60% of all the new people that is involved in cryptocurrency now. Now, since January, there is circa 60% of new people that are involved in cryptocurrency. They're new, they're excited, it's a way for them to make some money, they've seen profit shots, they've seen adverts, they're all getting invested, everybody's getting involved, right? So they're all getting involved, putting money in, and they've never seen a correction, they've never been in a bear market, they don't know what happens when Bitcoin falls. So you see, after that rate, it was a free-for-all. Institutions took their pie back, and then it left retail traders. Retail traders, when they experience losing money, they panic. Naturally, they panic. So when they panic, what do? They take their money. Whether it's in profit or in loss, they take their money. Many people would still be in some sort of profit with some of these alts. So they will take their profit. That causes that snowball effect to be like an avalanche. Absolutely tanks. And that is why in the space of just one day, this is just today, This is a one-day candle. You see it absolutely go from $43,000 to 29. Phenomenal, phenomenal drop. Over 10K just dropped just like that. So that's retail absolutely scared and taking money out. Now, what's going to happen now? Can this drop further? Can this drop further? It can. Because does it look like there's a reversal sign? No. Yeah. The key is going to be this time frame. The key is going to be this time frame. And again, it's going to be this time frame. This was a very easy call. When I mentioned earlier on the technicals, this is a spinning top. Spinning top candle at its swing high. How do we know that's a swing high? It's the first reversal candle we have seen in this massive bull run. It's the first red candle we've seen in 1, 2, 3, 4, 5, 6 months. So in half a year, we got our first red candle. Now, anyone who knows three candlestick patterns would know when you get a bullish candle, you get a reversal candle, you know exactly a red candle is going to come after it. Why? Because that's an evening star formation. And that's exactly what we got. Now you know the reason why we all closed our portfolios, or most of our portfolios, up here. Because the candlesticks told us. Of course, analysis and everything told us too, but it was ideally the candlesticks that told us that we were going to go down from here. Look at that. Pinpoint perfection started to go down. But how far it was going to go down, remember, it can really depend on how scared people are. What's helping this actually not go down further is there are a lot of people that are also buying right now as well, because obviously everybody believes they're nice cheap prices. So they're looking to buy now. But this is a significant wick with a hammer candle here. So I'd be very much inclined to say that we could get a V-shaped reversal, or this could continue to go down. If we look at RSI, and then if I were to go to the, should I go 8 hour? Yeah, if I were to go to the 8 hour, yeah, this divergence is evident to see. You can see a decreasing trend line going down here and an ascending trend line here. That's divergence, guys. I could even draw a trend line at the top, draw a trend line at the bottom. That's divergence, right? So you're losing strength, yeah, on the RSI here, indicating that we're only going to go one way, yeah. And then we fell. And now you can see that we're in overbought territories. Ideally, when we're down here, we tend to dip lower. We tend to dip lower. So I would not be surprised if we get to that 20,000 mark, which was the tip of wave 1 on the bigger degree. So I would not be surprised, because what generally happens is like this. You will get overbought territory. And as it stays in the same area, you can see it increases here. Overbought again. So, but where is it? It increased again. Overbought, increased. Overbought, increased. But now we're oversold. So we're going to rebound from here. Then are we going to dip lower? So something along the lines of, are we going to go like this? And then what that will do on here, let me move it up here. Something along the lines of that. And that will give the divergence that we'll be looking at if you're looking at relative strength to increase there. Not so sure. All going to depend on what happens here. All going to depend on how these candlesticks close on the larger degree. You know, so weekly candle is hella bearish. Still got 4 days left. You can see it here, 4 days left. So maybe if we were to push and get a hammer candle here, dragonfly doji here, then I think that that was the low. The low would have been in, and I think that the bull run will continue. If we don't, then I think that we're going to be in a little bit more trouble. But it all depends on where we go on the bigger degree time frames. Monthly time frame speak for itself. Daily time frame, again, if we shoot up a little bit more, a couple of thousand to the 40,000 mark, and we produce a hammer candle by the end of the day, we'll be fine. But this is worrying, guys. This oversold on the daily, it's worrying. Giving me the indication that we're going to pull up a little bit and then we're going to dip again. So I would not be surprised if the tip of wave 1 does come into play and we wick into that area a bit before we move on. I'd just like to point out that in 2017, when Bitcoin got to 20,000, it took 18 months, yeah, before Bitcoin started its upward trajectory again. Yeah, 18 months, so 1.5 years. So it was basically a 2-year correction before we actually took off. So if we're in a corrective phase now remember, anything more than 30% is correction, not a dip. Anything under 30% is a dip. We actually fell 55%, I believe. So that's not a dip, it's a correction. So Could that be in the top? Could 65,000 be the top, and could we be going down? Yeah, quite possibly. Obviously, of course, I had a expectation of at least 100,000, a nice round psychological number, before I would reduce exposure and then let the correction happen. Or if it continues to go, I'll be very happy with my profits at 100,000. The metrics, the charts, and the analysis that I've shown has all pointed towards that 100,000 mark. So I believe that is still on the cards. But we cannot ignore what has happened this week. Was it expected? Yes. Is it going to continue? We don't know. We need to let the charts dictate to us what's going to happen. Now, when I explained that the institutions all got out, and then you've got retail investors who are scared, who are getting out, you couple that with the news that you've got China looking to ban cryptocurrency payments, you've got India again coming out for probably the millionth time this year that they're going to ban it again. So this is all FUD, fear, uncertainty, and doubt that is brought into the market purely to scare everyone. We've been here before. We saw the same thing happen when the SEC were involved with the whole Ripple lawsuit. I specifically put out a YouTube video, and you'll see it somewhere here. Go to the other videos and you'll see it. I call it being FUD, that it was just a load of nonsense and everything would be fine, and Ripple were about to open up their war chest. And then as time has gone on since that video, it's looking ever so likely that I was right, and it was a load of FUD, and price dropped down to be, I believe, 17 cents at the time, and then it rallied to just shy of $2, which is a phenomenal return. You know, if anybody would have capitalized, I know many of us and students did get involved at those cheap prices. But FUD is what happens, and this happens a lot in the crypto space. Because you got to remember, guys, it's a non-liquid market. It can be manipulated. It can be it's a game of whoever loses money, someone is making money. Yeah, that's it. So whoever's making money, someone's losing money. Someone is losing money while someone else is making money. Another person making money is at the expense of someone losing money. That's just what it is, you know. But you buy when there's blood on the streets, and you be greedy when others are fearful. All right. Any questions, guys? Any questions you guys have? Just pop it in the chat. Let me have a little look and see if I can respond to any. Tax breaks, Alvin. Yeah. So look, just like in loads of different countries, you're going to have a threshold of tax as well, in which there'll be a certain amount that's not taxable. Tax breaks, yeah, there'll be all of that in exchanges as well, but there's a lot of wishy-washy components involved when it comes to tax and exchanges. They need to start working together before tax is very much enforced in a lot of countries. But at the same time, do not get sidetracked or lose your focus for the fact that there are people who make phenomenal crypto returns who are paying their taxes. You know, it's just they've made so much that they can afford to pay that in tax and have these crazy profits as well. A lot of people got in way early. The same happened in March 2020. Yeah, same happened then. You're going to get an aggressive downturn. You'll get a V-shaped type of recovery, and then you have the long correction. Now, a lot of us, guys, when I closed off a lot of my portfolio, I had told my wife and I'd said, look, I've closed this off. And then she questioned me. She goes, oh, why'd you close? And I said, look, from a chart perspective, it's telling me that I should probably take a lot of it out. And I said, you know what? The main reason, yeah, got to give yourself credit. We've done very well. Yeah, we've done very, very well with what we've done, how we have moved finances around to capitalize on this bull run since everything turned at 10,000. So I said, you know what? We've got to make the most of it, say well done, and just bank some of the profit, or most of the profits. And look, in hindsight, it was a phenomenal call. I always say, guys, take as much profit as you can off the table, as and when, every psychological number, take some off. This is a game of making money. Why would you want to give it back? I know people, guys, for 4 or 5 years who've been involved in crypto, same time as me, who still, to this day, have not taken a penny. So why would you go through that emotional roller coaster? You know, why would you not take profits? Now, there's the argument, oh no, but crypto, yeah, decentralized, and yeah, it's the future, and it's going to do well. Let's keep as many Satoshis and Sats as we can. Yeah, we're going to build it up. Let me tell you something. Let me break it down and be honest with you. Let me put some reality in you. Do you think banks and organizations are going to adopt cryptocurrency all of a sudden today, tomorrow, next month, next year? No, they're not. It took us over a decade to get to where we are, just to get the first institution involved. But somehow everyone thinks it's going to be the new payment system. No. Then the next funny thing, yes, cryptocurrency decentralized, but then people are withdrawing profits. What does that come into? That comes into your bank account. Is your bank account decentralized? No, it's not. It's centralized. A whole. So the argument doesn't apply to that. Of course it does. Come on, don't be so stupid, you know. And then you've got influencers telling you, oh no, don't hodl. That's the term, right? Hold your crypto. Don't sell. Don't sell. Why? People have bills to pay. They want to go on holidays. You know, they've got family to feed. Why would you not encourage people to take money off the table? This is a game of making money. You know what? The future is the future. We'll deal with the future when that comes there. At the minute, if people have debts, if they've got things in which they need to pay for, allow them to withdraw their money. They've worked hard for these profits. Let them reap the rewards. Makes no sense for people just to brainwash people into hold. It does make no sense. You know, enjoy today because tomorrow is not promised. Next. I'm only jumping off a cliff if you told me to, if I anticipate. Thank you. And remember, when it comes to institutions, you got to remember a lot of them were using it as the reserve. I'll talk about gold in a moment. We're using it as a reserve over gold for a while. So what that means is that it's institutions' clients, by the way. It's their client, not them themselves. It's their clients who have asked, I would like to have my portfolio shared in so and so and so, and I'd like to hold a little bit of Bitcoin or have a part to play in Bitcoin. And so it's the clients that have asked these institutions. The institutions have gone to Coinbase. They've got their crypto portfolio. Coinbase handle everything. They then get Bitcoin distributed amongst their clients. Everyone is holding Bitcoin. Now, when a client and an institution, so generally, when it comes to an institutional portfolio, what happens? They are guaranteed, let's say, 5% to 10% guaranteed return per year. It's a safe option. Now they have a lot of clients, right, who are promised the same deal, 5%, 10% in a year, and ideally they've got gold reserves, which is money in gold, right? So if ever they don't meet their targets or they don't earn enough via their trades through that hedge fund or institution, reserves get taken out of gold. Gold gets taken out, it gets given to them. So that's why these people and their clients are always satisfied, because they're always going to get their guaranteed sum. And that's what gold was doing. Now, everyone had Bitcoin, yeah? And so Bitcoin was doing the same as gold, yeah? But it was doing it a lot more, yeah? You'd get a lot higher return, whereas gold takes ages for you to gain a little bit of return, even though it's also volatile, but Bitcoin was doing it a lot quicker. Now, let me explain where gold and Bitcoin fall into this whole financial situation that we're in. There's something called money rotation. Money rotation is when money is taken out from one place and it's put in another place. Taken out from one place, put in another place. Taken out from one place, put in another place. Now, where has all the money come from to push Bitcoin up? Easy. Yeah, it came from gold. If you look at the trajectory of how Bitcoin's bull run started, and then look at the top of where gold started to fall, money was taken out of gold and it was put into Bitcoin. Hence, you had the rally. We're not going to focus on the US dollar. That has been in a downward spiral for a long time. So we're just gonna park that idea. But we're going to involve the stock market here as well, the S&P 500. So money gets taken out of gold, puts into Bitcoin. Look at what's happening right now. You see Bitcoin absolutely plummeting, right? So let's go to 4 hour. Plummeting. If I were to go to gold, ideally, gold should be rallying, right? Because money gets taken out, and there you go. Yeah, money gets taken out of Bitcoin as it's collapsing. Institutions now put it back into the reserve asset, which is gold. You put it back into gold, all of a sudden, gold starts rallying. Yeah, this is rotation of money. And then you see the S&P 500. Let's go to the S&P. S&P has had its 5% dip here, and you're looking like a 2.5%, 3% dip here. Now, the S&P has probably been due a correction for years. We have had an absolute V-shaped recovery and a bull run since the coronavirus crash in March. So this has been on a direction since March. It's been phenomenal. Now, what makes me believe that this is also going to turn and this is going to continue upwards is that there's a lot of people that are going to now take money out of Bitcoin, or who have taken money out of Bitcoin, haven't put it back in gold yet because you haven't seen the biggest rally in gold yet. But I believe money rotation tells me that money's going to be put back in stocks. So that's why you should probably read a lot of the articles that P8FX put out, because we give you guys hints and tips. And there'll be another article coming out soon, which will give you our 5 top picks of stocks to pick for over the next few years, which is a long-term hold. So definitely one to check out. Some more of your questions. Rex, pat on the back. Thank you, Rex. It was a great call. Alvin, dollar cost average for the next week. Blood on the streets. Play the game, Alvin. Play the game. All right, cool. Take care, Ben. Lex, institutions have reduced their exposure on Bitcoin. Does that mean they've done the same on other altcoins, or is the correction on alts due to retail? So, Lex, for your answer, institutions were only involved in Bitcoin, and there were a few involved in Ethereum. That's it. There is no real exposure to the rest of the altcoins or decentralized finance as of yet. It's a very new market. You're not going to expect institutions to put their money into a lot of different projects that haven't been around a long time. Now, there are a lot of projects that have come out of the woodwork in the last year or two, many projects that have been around for about 5-6 years. But the only one which institutions will actually put money is something that is proven and that works. Bitcoin does work. It's got its flaws, but it works. Ethereum works. Again, got its flaws, but it works. And so that's where money is going to be put. And to an extent, institutional money really hasn't been pumped into Ethereum yet. A lot of it was retail hype. Institutional money has been put into Bitcoin. How do you know the difference? Because of the size of the candlesticks. When you see something move $100, couple of $100, $500, $700, that's us, small people. When you see thousands of dollars, that's the institutions with the big money that's coming. And so that's the same thing you keep an eye on. So the alts were moving, just because they're coupled with Bitcoin, they were only moving in sync. You'd have a week where a particular coin would just outshine everything else, but that's normal. That's just normal in crypto. Every kind of crypto with a substantial amount of backing or credibility behind it will have its week where it does a crazy 30-40x run. But generally they all move with Bitcoin. So institutions are not involved in anything else at the moment, just Bitcoin and some in Ethereum. And when you have a lot of people calling alt season, DeFi season, there is no season if Bitcoin goes down. Actually, you've got a bloodbath season which is commencing. That's all. Okay, so interesting to see what will happen. We'll have a look at the technicals, and then we'll see what happens with Bitcoin then. And that's it, guys. If there's no other questions, I'm going to leave it there. Hope that was a little insight into why we had these dramatic falls, coupled with a bit of FUD, coupled with Elon Musk spouting, and then having the retail paper hands just selling off a lot of their profits, and institutions just reducing their exposure due to threats from governments. And that's that, guys. So thank you very much, and then catch up soon. Take care, guys.